In fact, yesterday, the Challenger job cut report came out and it showed 76,835 job losses in November. That is a huge number. It's more than double the number of job cuts announced the prior month and more than 5 times as many job cuts as were announced in November.
Peter Schiff, a prominent American investor and stockbroker, is predicting an economic crash in 2023 that will have far-reaching and devastating impacts. Schiff, who is CEO and chief global strategist of Euro-Pacific Capital, has long been warning that the U.S. economy is headed for a crash and that the government's policies of artificially propping up the stock market and issuing more debt will ultimately lead to a severe recession. Schiff believes that the current economic situation is unsustainable and that the issue of excessive debt, the ballooning of the national debt, and the Federal Reserve's money printing will all lead to a collapse of the U.S. economy. He is urging people to prepare for the crash now, as it will be too late to take action when it actually happens. In this video, Peter Schiff talks about the unemployment rate and job losses and how inflation is eating up the economy. Please watch, like, and share this video. Also, drop your comments and thoughts below, and remember to subscribe to the channel for more related content similar to this. We begin with a short clip of Peter Schiff.
Yesterday morning, the Labor Department released the highly anticipated November non-farm payroll report, otherwise known as the jobs report. And I think a lot of investors were anticipating that we would finally get a miss in the number of jobs created. The consensus was for 200,000 jobs created in November, and I think a lot of people on the street were looking for a lower number, and for good reason. Lots of companies had been announcing layoffs, particularly technology companies.
In the video, Peter Schiff mentions the Challenger job cut report, which reported that around 76,835 jobs were lost in November. He goes on to state that this figure is more than double the amount of job layoffs revealed the previous month and more than 5 times the number of job cuts announced in November 2021. This assertion was backed up by a trading economics report, which indicated that the job cutbacks are the largest since January 2021, compared to 33,835 in October. The report also disclosed that the IT sector declared 52,771 layoffs, the largest monthly number for the sector since precise industry statistics began being recorded in 2000. According to a report by Yahoo Finance, a rising number of corporations, particularly in large tech, are battering down the hatches as they warned of a bleak economic future. Many Democrats have criticized the Federal Reserve for its rapid interest rate rises, according to an article posted by Fox Business, and have warned that they would ultimately lead to further job losses. Listen to these carefully.
In fact, this is the 7th month in a row where the jobs numbers have come out stronger than expected. And as a matter of fact, this report even included an upward revision to the prior month, which was originally reported as plus 261,000, which was a beat. Well, now it's a bigger beat because that was revised to 284,000, but the November number came in at plus 263,000 jobs. But probably what the markets also reacted to, in addition to that bigger than expected number, was the larger than expected increase in average hourly earnings, which were expected to rise 0.3, which would have been a smaller rise than the 0.4, which was originally reported for the increase in the prior month. Well, that number was revised to up 0.5, and the November number came out at 0.6, double what had been estimated, and actually 50% above the upper end of the range of estimates, which went from a low of 0.3 to a high of 0.4. And year over year, average hourly earnings, which were expected to rise by 4.6, and which would have been a slight reduction from the up 4.7 from the prior month. Instead, we revised the prior month to up 4.9, and November, instead of going down, it rose to up 5.1%. So a big increase in average hourly earnings, both on the month and year over year. And that sent the chill through the market that the Fed would now have to be tighter with its monetary policy because inflation was getting worse due to increased pressure from rising wages. Now, average hours worked actually declined a bit from 34.5 to 34.4, but still, workers got paid more for every hour that they did work. And that, of course, adds to the upward pressure on costs that their employers are already having to deal with. But in reality, it's not rising wages that are going to cause higher inflation. It is higher inflation that is causing wages to rise. Wages are just a price, the price of labor, just like every other price, and prices are going up because of inflation. Rising prices don't cause inflation, they result from inflation. And what this jobs report indicates is higher inflation. Inflation is pushing up wages. Now, they're not going up as much as prices because prices are still up about 8% year over year, and that's the official increase. The actual increase is probably twice that amount. And so real earnings are collapsing. And that is the real story behind this payrolls number, because contrary to the way it's being described by the media, it is not a strong report.
Schiff believes higher inflation is causing wages to rise, not the other way around. He cites several examples of how inflation is affecting everyday items. He goes on to say that while the Federal Reserve has been raising interest rates to combat inflation, it has only further hurt the economy by making it more difficult for consumers to borrow money. Schiff argues that higher inflation, not rising wages, is to blame for the current state of the economy. He believes that the economy will continue to suffer unless something is done to stop inflation. Prices are rising because of inflation. Inflation is the increase in the prices of goods and services. It is caused by the increase in the money supply. The money supply is the amount of money in circulation. When the money supply increases, prices go up. Inflation is a real problem for the economy. It erodes the purchasing power of families and businesses. It makes it difficult to save for retirement or a rainy day. And it makes it hard to borrow money for a new business or a new home. The government tries to fight inflation by raising interest rates. This makes it more expensive to borrow money and slows down economic growth. But raising rates too much can cause a recession. So, the government has to be careful with interest rates. The other thing that can help fight inflation is tax cuts. Tax cuts put more money into people's pockets and help them afford higher prices. However, even tax cuts can also be risky, as such a move, which was recently adopted in the United Kingdom, didn't pan out well for their economy. The jobs report indicates that inflation is pushing up wages. This is good news for workers, but it will eventually lead to higher prices for goods and services. Inflation is eating up the economy, and we need to be careful with our spending habits if we want to avoid an economic downturn. Listen to these carefully.
A strong report. In fact, I read one news story that described the U.S. labor market as being hot. Because of this report, we had a red-hot labor market, according to the media. Well, the labor market is not hot, it's actually cool. In fact, it's pretty much ice cold, and that's what the non-farm payroll report actually reveals if you're smart enough to look beneath the surface. And by the way, you don't have to look very deep. Just looking at the nature of the jobs that were created, they were almost all service sector jobs. Only 14,000 manufacturing jobs were added. That's well below the 20,000 that were expected, and even more below the 36,000 that were added in the prior month. Remember, the problem with these service sector jobs, and a lot of them were in government, they were in healthcare, they were in leisure and hospitality, but these jobs don't produce goods. But the people who have these jobs buy goods. Well, if they're buying goods that they didn't help produce, where are these goods coming from? They're going to come from abroad. These jobs that are being added are simply going to add to the trade deficit as people who have non-productive service sector jobs take their paychecks and buy goods that they didn't help produce. And not only do these jobs put upward pressure on the trade deficit, they also put upward pressure on goods prices. because you have more people with paychecks to buy goods, but you don't have more people working to produce those goods. So you don't get the increase in supply, but you do get the increase in demand. So not only did this jobs report indicate higher inflation, but it portends even higher inflation in the future. But getting back to the details of the report itself, the unemployment rate held steady at 3.7%, but the labor force participation rate fell. It went from 62.2 down to 62.1. It dropped a tenth. The expectation was for an increase of 1/10 to 62.3. In fact, the consensus forecast went from 62.2 to 62.3. Nobody expected labor force participation to drop, but that's exactly what happened. And that is indicative of a weak labor market.
Peter Schiff is not the only one talking about job losses and inflation. While his perspective may be dire, there are things that can be done to mitigate the effects on both American workers and families. There are several alternatives to simply losing your job or experiencing inflation. If you are worried about losing your job, look into getting a degree or certification in a field that is in demand. This will make you more attractive to potential employers and help you weather any layoffs that may come your way. If you are worried about inflation, consider investing in assets that will appreciate in value over time. Gold and silver tend to do well during periods of inflation, as do real estate and collectibles. By diversifying your portfolio, you can protect yourself from the negative effects of inflation. What can you suggest that needs to be done for the economy in combating inflation? Kindly let us know in the comment section below. That's all for today. Kindly share this video with your family and friends, and don't forget to hit the like button and subscribe to our channel for more updates like this. Thanks for watching. Anticipate our next video update.